The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Rich Anderson of Anderson Capital Management on as our guest at the half hour to talk to us about soybeans, wheat, corn, and some other commodities that we're taking a look at. But the first chart that I posted here to Tiger Den today is from a young man that is learning to do pattern recognition. He trades from across the pond over there in the UK, and this is his first attempt at doing his first trade. And as you can see, he did about everything possible that you could do to discover ABCD patterns. And this is how you learn this stuff, because once you understand that these markets repeat themselves over and over again, and they do so within a probability range, that's what our edge is, and that's what we're trying to, get across. Now, that happens to be a half-hour chart on the gold market, and I've posted into Tiger TV the 4-minute chart on gold from what happened Friday into today. As you can see that ABCD pattern again forming very, very nicely up there at the high there of the night session today, around that 1263 level. So what we're watching now is if gold can break below that 1248, that would break the 786 retracement, and that would send a message to the market that it's probably going down to somewhere around the 1225 level. The reason why I posted that chart in the about the New York about the gold and the ABCD pattern was because we're seeing one happening right here, right now, that affects just about all of us, including anybody in the stock market, because everybody watches it, and that is the crude oil market. And this is a chart that has a great deal of the things that we look for as far as repetition that we're watching. And if you'll look at crude oil going over the past year, if you go back to last March, you'll see that from March into May, the market rallied 35 days. Then when we came down into August, on August 24th, when we had the big sell-off in stocks, the crude oil then rallied another 35 days, right up to a 50% retracement. This led to the ABCD structure that took us down to the 26 and change level, where AB equals CD, and you have the 3 drive to a bottom pattern. As you can see from that second $13 per barrel rally, which took 13 days, we came down in ABCD format all the way down to the 3rd drive to the bottom, and then we rallied 35 days. The 35th day was Friday, and it did make a high on Friday. And what's interesting, and that's why I'm trying to point this out this morning, is that we're down $1.50, almost $2 a barrel. In fact, we are down $2 a barrel. No, not quite, about $1.75. But from the high that we made on Friday. Now, should we take that high out and we get above $40 a barrel, that would suggest that this cycle is finally broken and we're getting ready to go higher. But that's not what's happening right now. So what we'd be watching for would be to look for a pullback in crude oil. We made a low of around 27. We had a high of at 39. That's 12. So the 61% retracement back on that is 7. So that takes you down to $32 a barrel. So that's where you want to look for your first support. If it's really bullish, and it only comes down to a 382 retracement, which would be $5 a barrel, that would only get us down to about $34 a barrel. And that's where we broke out from on the last time. So 34 is the first number we want to look at. $32 a barrel is the second number. So we'll watch that really, really closely, because if it takes several days just to make that $34 a barrel level, that is going to, excuse me, $35 barrel level. That's going to be a very, very bullish scenario potentially for oil. I know that the fundamentals are very bad, but they're not any worse than they were back when the market was making a low at 26 and change. Nothing's really changed. The market is just having its normal, short covering rally, and it's perfectly harmonic. That's the most beautiful part of it, because you can't deny these 35-day cycles, and those are trading days, folks. They're not calendar days. They're trading days. So that encompasses about 6 weeks. So this is what we're seeing now. We had 6-week rallies after these vicious breaks that we had. Now, are we going to go down from here? I don't know, but it started down today, and so we'll see if that's going to be very, very important or not. But right now, it certainly looks that way. Another ABCD pattern that we're having right now. Give me 1 second here to get it up, and that is in the utility index. And if we look at this on a 4-hour chart, which covers well over 2 months, you can see the 3 drive to a bottom pattern that we have. It's a perfect ABCD to the upside, and all the ratios have been completed at the 1.618 level. So this is telling us that the utility index should be ready to turn and come down at least around 3%. That's the minimum objective. Remember, this is a 4-hour chart, so it's a lot smaller than the daily, but on this particular chart, that would be the factor that you're looking at here, is to see the market pull down into the 620 level, and we're trading at around 650 right now. So that would be the scenario for the utilities. Now we want to switch over and we'll do something for the stocks too, because they're doing the same type of patterns that we're watching. And I just wanted to bring the main one up, of course, is the New York Stock Exchange Index. And the New York Stock Exchange Index has also completed that equal rally that we just talked about in crude oil. We're seeing the same type of ABCD structure that we had from August through November. It's a perfect 50% retracement from the high that we made on May 19th. As you can see, we do have the ABCD move there. And what's interesting about this that I particularly like is that you have that 1.618 expansion of the move during early February to the middle of February, when the market went down and made a double bottom. So when you make a 1.618 expansion of that, that usually means the market is incredibly overbought and it should start to back off. Well, you've got a lot of things going for us if this is going to be the case, because you have the equal rallies that we had in from August through October, and now we have one January through March, and right now they're absolutely perfect. If the market's really strong today, they won't be perfect, but as of Friday, they look pretty perfect. I mean, they were spot on, exactly the same. And you had the ABC structure inside those also. So that's the kind of thing that, it's mother, God, and country. If you like that kind of stuff, that's everything that you could possibly ask for. That's basically the same chart that the gentleman from the UK did, only he put all of the numbers and everything in it in order to prove to himself it works. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, looking good, Billy Ray, feeling good, Lewis. And folks, if we were to give a prize to the smartest man in the TFNN family today, it goes to Duffy. Today is Pi Day. It's 3.1416, which is the circumference of a circle, and he pointed that out to us. So it's 31416, which certainly must mean something. That means that the next day must be 31516. Wow, this is starting to add up. Duffy, you should be really proud of yourself to see that, my friend, because that's the number that Pythagoras loved so much. It's how you find the circumference of a circle and where all these Fibonacci numbers come from and all that stuff. It's all interrelated, but that's neither here nor there. Now, the next chart that I'm going to post here this morning is from our good friend John Murphy, and what it's doing is it's showing the percentage of stocks above the 50-day moving average. And as you can see, we've actually went up and touched that level that we made back in May, on May 19th, when we had Norm Winsky from Astro Trend on, when the market was making its high day. That day we had a new moon and Mercury going retrograde. Now we have this ABCD structure, as you can see, highlighted in red. That's a perfect ABCD move, and so this, and as you can see, the ABCD moves all through this particular oscillator, and that's all you're doing when you're doing pattern recognition, is you're just looking at price and time, trying to find a point within that structure that gives you a place where you don't have to risk very much. And remember, risk is the price you have to pay in order to open the door of opportunity, folks. And I believe the door of opportunity is knocking pretty hard right now on this stock market stuff, because we have so many of these that are making these ABCD type formations, and that's the main thing that we want to keep an eye on. Now, I've had a request to take a look at what's been happening to the Bradley model, and what I've done is I basically inverted the model, because it does invert from time to time. What's interesting, the key dates are very, very powerful. You can see by just looking at these key dates that they're very, very good. But we've certainly inverted. There's no question about that. But what's interesting, if you'll see that ABCD pattern, that's the second sell Gartley that we've had since the market topped on May the 19th. And you'll never guess what Friday's high was. It was exactly 61% of the high from May 19th. That came in at 17,213, and I believe that's where we closed. So this is what we have facing us now. We've got a lot of these patterns that are certainly coming in. We finally have our good friend calling back again, Mr. William from Singapore. Are you there, William?
Yes, I am. It's a
good.
Good evening.
How are you?
Yeah.
And I finally. Fine. I have your BIIB stock up, so we can
yes.
Go ahead and ask the question that you might have. Fire away.
Okay, I'm just thinking whether are we right now close to the bottoms for taking long trades on BIIB?
Well, we've as you can see, we've completed the big ABCD from September. That happened down around 244, and then you made a smaller ABCD just recently at 274, but this particular stock is much weaker than the rest of the market, because the rest of the market, would have rallied, given the equivalent on this stock, somewhere way above 300, and we could only get as high as 274. But each stock, when you have to do this, you have to do each stock separately, because they have their own cycles that they work off of. So when you're trading a stock, remember, it's a market of stocks, not a stock market. So trade this stock just like you were all by itself. Don't worry what the S&P, the Dow, or NASDAQ is doing. Just do that. The only thing I caution you on here is that we just had an ABCD structure from February the 10th to the 4th of March. And then we sold off again. But this market must hold 248, William, or it's no good. If it breaks below 248, and it's 259 right now, that's what it looks like to me.
Okay. Thank you very much, Mr. Pesavento.
Thank you for calling in, and I'm sorry we had those technical difficulties last time, but we got it corrected this time anyway.
Yes. Now I got the I understand now.
Okay. All right, William. Thank you very much. Okay, now the next chart that I wanted to talk to you is about this indicator that our good friend Shane Smolian from the wolftrader.net, basically this is how he calculates how the Fed is putting juice into the market, with their buyback programs and repos that they do. And as you can see, this is we're at the highest level of buybacks since the second quarter of 2014. So this all lines up together when you're seeing the number of new highs above the 50-day moving average, and those are the 50, the 200, and the 100 are the three moving average that the traditional technical analysis use for looking at the stock market. So that's also telling us that that's what's pushed us up here. Now, if this is correct, we should start down. Now, we're slightly weaker this morning in the market, not much, but just a little bit. And if it continues to close badly today, that would tell us that we're pretty much getting ready for the correction, that we've been anticipating when this ABCD structures and all these stock indices and everything finally completed, because that's what we're waiting for. And there's all time and price, and everything is lined up. It's about as harmonic as you can possibly get. Now, on the other side of that, if we go back to talk about the risk on, risk off situation that we have going on in the market too, you'll see on the treasury notes, we had that beautiful butterfly pattern, Gartley, let's try it again, Larry, a butterfly pattern form when we had this shooting star candle back on February the 10th when the notes reached 133. We're now 5 handles under that. We're down at 128, and we're setting exactly at the 61% retracement of the low from November. And we had 3 lows there. If you'll notice, over a period of about 3 weeks, we made higher lows at that 125 and change level, and that was another indication that we were getting ready to have a pretty good turn. And now we're making that 61% pullback, and this is where we're really looking at this, because we need the notes to stay above the 128 level, because if they can do that, there might be the risk off situation come on again, where the people get out of stocks and go into notes and bonds, and that would cause the notes and bonds to rally. Longer term, folks, I don't see how you can be bullish on notes and bonds just from looking at the longer term charts, but shorter term charts, we could easily get a 2 or 3 week rally out of this without too much trouble. So those are just a few of the things that we're looking at today. Now, I wanted to also bring up the hold on, give me 1 second here. I wanted to do the Dow Jones, because we did the Dow Jones with the Bradley. I wanted to do it without the Bradley, just to show you what it looks like again and see it very clearly. 877-927-6648. Stay tuned for Rich Anderson.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have our good friend Rich Anderson of Anderson Capital Management on this morning. How are you, Rich?
Good morning, Larry. I'm doing great. Back in Minnesota.
Oh, wow. Must be warming up. What is it, about 7 below today?
No, it was 72 yesterday. It's a little cooler today, but it's been amazing up here. It really
Wow.
has.
Shut the front door and raise the rent. Maybe El Nino is going to be coming back, huh?
Uh, well, it had started to cool off, which is what you normally expect to bring a La Nina, but
Uh-huh.
then it started to warm up again, and they call that a Malachi El Nino. I don't know why they call it that, but if it were to cool off significantly, the Midwest could have some major weather disruptions this summer. But this El Nino, like it hasn't normally, would bring more rain to northern Mexico and to California than what it's done in the past. Also, last month we set another record for worldwide temperature. It was up, I think, like 1.3 degrees above the average, and it's something a person has to keep their eye on. That's for sure.
Well, the first chart that I posted in here today was a request on soybean oil. We don't look at that very often. We usually just look at the beans. We don't look at the oil and meal as often as we should. But we've been in this really high level consolidation level around $32 a pound in the oil. What do you think's going on there?
Well, the reason, the oils in the meal are a function of when they crush the beans, you get oil and you get soybean meal. And so very few people trade the products. What's going on is that the oil's partially a fuel in biodiesel, but it's mostly cooking and for human consumption. The underlying thing that's caused the oil to be strong over the last several months is the effects that El Nino has had on the palm oil. And palm oil, unlike a soybean, you can see it in the field, and when it's dry, it starts to turn yellow and then brown. Palm oil is kind of a tree, and you can only, by examining the bark real closely, can tell the effects of the weather, and you really don't really understand what the true effects of the weather are on the palm oil until harvest. And palm oil and soybean oil are basically the same thing in the world market. They're interchangeable. You could use one or you could use the other in most applications. And, that's anticipated that we'd have a problem. But until that problem is verified going into harvest, or until, the energy prices would have to get a whole lot higher for soybean oil to have any push from the energy, from the biodiesel segment, it's already priced in this weather problem that we have with the palm, and it has to wait until that's verified with harvest.
Now, palm oil is an Asian crop, isn't
Right,
it?
right.
Okay, I remember that. I've never
we
traded,
only
did I?
talk about El Nino with regard to this country, but the ocean temperatures around the world have been way warmer than normal.
Mm-hmm. Okay, now I posted the chart of the new crop soybeans, November beans, and I noticed we've been in this consolidation between 928 and 860. Any news coming that you're hearing about on the planting intentions of what the farmers are looking at? Because I know they have to get ready to get their loans and stuff for the crops. So what are you hearing there?
Well, they would have already gone to their bankers and gotten their loans. There's less input costs in planting soybeans versus corn, and so with cheap corn prices, you would think there'd be more soybean acres. The government, the most recent acreage number was at Ag Forum. Remember the last time I was on, I said next week there's an Ag Forum in Washington D.C. and it's going to every year it shows just bigger numbers, and it's always a bearish input in February. Then actual next acreage numbers come. They'll come at the end of the month, end of March. That's when we'll really start to see those. I particularly am looking at the daily chart, and I don't like the market action from last night. And this could end up being one of your favorite patterns here today. And above $9, there's plenty of guys that can lock in at least a small profit. And beans are amazing. The genetics on the seeds for both corn and beans are so amazing that these things grow today way better than 20 years ago. With the same kind of weather, you would have gotten next to nothing for a yield, and now we get pretty decent yield. So $9 is going to attract some hedgers, and I think that's what you're seeing by today. Made a higher high than Friday and soft into the biscuit close and then reopened.
when we talk about these prices, Rich, I'm almost shocked because we've known each other for almost 40 years, and when it was used to be when beans ever got above 450 a bushel, that was a major bull market, and to see them at 6 or 7 was, an outlier event. And now we're trading $2 higher than that, and that's the floor. I mean, it's what is that? Just because we haven't had any inflation? What's the reason why beans are so much in demand as opposed to where inflation should be?
Well, the usage has grown over the years, and they poultry and pork are two of the biggest users of soybean meal. And poultry, as the white meat became more and more popular, and they found a place to get rid of the brown meat. Initially, it was exports to Russia, and now, of course, you got Buffalo Wild Wings all over the country that you get rid of the wings. Poultry has become a look at the price of Sanderson Farms or Tyson. I don't trade stocks, but I know both those stocks have done pretty good this year.
They certainly have.
The profitability, because corn prices are low, and the poultry prices are reasonably high.
Wow.
By the way, in the pork, there's an interesting thing that all this artificial insemination is how the vast majority of livestock is grown these days. I mean, chickens, because they bred the breasts to be so big, can no longer breed themselves, so they have to be artificially inseminated. That's kind of an interesting statistic. But in the pork, just recently, one of the major providers of semen had changed their vials or something, and so like over half the vials were ineffective, so the sows didn't get pregnant, or they did and they didn't have as big a litters, and so we think that may have some impact down the road here on the pork market. I mean, it's strange but true. You can't imagine something like this would happen, but the vials weren't any good.
Wow, this is really
that's kind of inside information, but that's the truth, and I think we'll see that in the numbers being 3 to 4% less as we go forward in the next between now and July.
Rich, what is your personal opinion of this genetic modified corn and stuff that we're using? I mean, we hear a lot of things in the news about people that are in the healthcare business that do, organic stuff, and they're, really strongly against it. What is your feeling on the genetically modified stuff?
Well, take the first problem we had was in corn, and Monsanto came out with some genetically modified seed, and if my field's within a mile of your field, the wind's going to cross-pollinate, and all of a sudden, everything's genetically modified. Initially, many of the European countries wouldn't buy it because it is somewhat different, and in fact, it made the Hispanics in Mexico had physical reactions from some of this corn because they eat it as a human thing. I think there are problems. I think there are problems, and we had no clue about them.
Hold on, Rich. We got to take a break here.
Sure.
Stay with us, and we'll be right back, okay?
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks. We're talking with Rich Anderson of Anderson Capital Management on genetically modified grains, and we were talking about corn. Is the same thing occurring with wheat?
Oh, absolutely. That's why you've got guys writing books like Wheat Belly and people going to gluten-free diets and stuff like that. It's not the wheat that our parents ate. When they had bread, it came from real. It's so genetically modified. It's unbelievable. And the price of seed corn when I was a kid was maybe $20 a bag, and now it's $150. But the genetics that's in it is worth it. I mean, it's worth it. I think, I think it's a real issue. By the way, the price of the dollar, currencies, we seem to have a bit of a currency war going on here with all these QEs and stuff. And the only way the grains will really light a fire is if we finally top out the dollar and to the world market, we're relatively expensive, even with cheaper prices because of our currency. And the other thing that's going on is volatility. That the stock market's moved almost 60% of the time since the beginning of the year. And if this were to continue, it would be the most volatile year since 1933.
Well, I wouldn't be surprised because, this is the type of cycle that we're in where it's got to repeat, but you are seeing 100-point swings in the Dow, just almost daily, so it's not a big deal. Rich, since we were talking about the dollar, I posted the long-term chart going back 40 years when we had the Bretton Woods Agreement, when, in fact, that's when we first met, as you recall,
right.
When we had when Nixon took us off the gold standard. And what's your feeling here on the dollar? And are you hearing anything specific that we might be able to use?
Well, I mean, Draghi basically said last week that he's not going to have any more interest rate cuts because they're worried about these banks imploding, not being able to make any money with these negative interest rates and how it's going on. And one of the problems was they had no more, or it was getting harder and harder to buy government debt, so they've extended it to corporate debt. Okay, in the ECB, the corporate debt, the biggest place where they can buy corporate debt is France. Second biggest is Germany. And then there's a little bit in Spain, a little bit in Italy, but it's really those France and Germany is where the bulk of it is, and they got to try and help the whole ECB, and I don't know that it'll be quite as easy to do as they thought because they're the smaller countries, the Netherlands and Belgium and places, they just don't have lots of big corporations that have big corporate debt that the ECB can buy. So it's going to be interesting. Deflation is the risk that everybody's focused on. We can't afford deflation because with the debt that we have and everybody else in the world has, the only way out of this is to inflate it.
Uh-huh. Sure makes sense. And we're starting to see some, we had this big rally in gold, and it's given up a little bit. And also, copper's had a big run, and some of these others look more like bear market rallies than anything else.
No doubt. The platinum, and platinum, as I told you last time, was going to probably gain on gold because of the potential strike and the number 2 producer in the world. That seemed to have verified. I was noticing on the Dees corn chart, if you draw a 20-man line off those previous 2 lows, someplace between where it broke that line and the downside at 82.5 and where that line extends today at about 88, I think you'll start to see a deal of selling come in. And if the beans close under the opening today, it's going to look like one of your hangmans,
Oh yeah, those are great patterns, because it's they don't call them hanging mans for no reason, right?
Right, and the fundamentals are, it's at a price where, I know I'm going to plant so many acres of soybeans and I can lock in a profit on, so I'm going to sell 40 or 50% of my production, and that's what you're starting to see. The currencies and weather are going to be the 2 things moving forward that are going to be the catalysts that can make major moves.
How about we have a question from one of our listeners on cotton. I don't trade cotton, but I know you have a couple of people that do. What's your feeling on the cotton market? Because we're down around this 57 cents a pound level. So do you have any information on that?
Yeah, well, actually, one of my friends is probably one of the largest cotton brokers futures brokers in the country. The big buyer is China. China's not a big buyer of anything these days. By the way, a week ago, currency controls went into effect in China, and if you look at the exports to Singapore, they'll see that there's been a big spike. That's because they're, when they buy something, or when they buy something, they pay twice as much, and then they keep half of it, and that's how they're moving the money out of China. But these currency controls, I think, will catch. But I think at 57.5 cents, cotton has value. You'll see the new crop is 64. I'd like to get it to pull back into the 58-cent area, and I think it's going to have value. But China just isn't buying. They're not buying like crazy. Yep. And corn, beans, cotton.
Everything.
They've got their own. Yeah, they've got their own deals that they're working on right now, and so it's kind of a different situation than it had been. But nevertheless, when they lowered the reserve requirements, a couple of weeks ago, we saw a pop initially in the financials, and then we saw a pop in the commodities, and I think that's helping a little bit. But they're just not going to be the big buyer that they were for the foreseeable future for the next 6 to 9 months, and so cotton's going to have to either have a weather problem or China will have to get turned around and show more demand than we're seeing right now.
Well, Rich, thanks for being on today. We'll have you on in another couple of weeks, and if something pops up that you need to let us know about, be sure to give me a jingle, and we'll have you on the show, because you give us some great information, and we certainly appreciate it.
Well, keep an eye on that line in the Dees corn, and watch where the November beans close today. I mean, that's going to tell you a lot.
Well, thanks a lot, Rich. That's Rich Anderson.
Thank you.
Of Anderson Capital Management, and we certainly enjoy having him on as our guest as often as we can, because he's an expert in livestock and grains, and also in the energy complex too. I posted a couple of charts in here before we came on the air with Rich. One was the gasoline futures, and as you can see, they have also made a 61% retracement of the high last month. So that's another reason, why the crude oil could come into some pressure. But the main reason is the fact that we're 35 days up from the bottom, and we've done that 2 other times in the past year. The first time it rallied $19 a barrel, then $13 a barrel. This last one was also $13 a barrel. So we'll see how that ends up. I'll repost the chart for the gasoline, because I think it's an interesting one, to really look at, and all I have to do now is to find it. And I was just looking at it, and where did I put it? I know I put it somewhere. Well, I'll find it eventually. Maybe by the time the break comes, I'll be able to get it out and take a look at it, because it's in the file. I think this is it right here. There we go. Doesn't take me long. I'm not as fast as I once was, but I'm as slow as I ever was. So hold on one second here, and we'll put this in here. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to finish up the show here with this ABCD pattern and the harmony that we have going in the crude oil market. We've watched these 35-day rallies that we've had. Those are trading days, folks, not calendar days. And we had one, last March. We had another one back in October. And now we've got the third one that was exactly 35 days. That came in on Friday. Right now, we're $2 a barrel under where we were on Friday. So that's going to be better than a 4% move in oil. Well, it's 5% almost so far. But the key levels to watch on the oil, of course, are the $34 barrel level. We're $3 away from that. That's the 382 retracement of the $13 move up. And then, of course, we have the 61% retracement coming in at $32 a barrel. So what you should do if you want to be a buyer of the oil is to wait for possibly a 3-day sell-off, because we've been very strong here over the past 5 or 6 weeks. And so we are overbought, and we should see if it pulls down into these strong support areas that we're looking at. They're nothing more than Fibonacci support levels. That's all they are. You went $13 higher in the oil from the bottom, so 61% of the 13 takes you in at about just about 8. So $8 a barrel off of that takes you down to 32, and the 382 on that takes you down to about 34. So that's what we're looking at. We've already talked about the Dow Jones, how we've had a ABCD pattern there that stopped at the 61% retracement, and we also have the Bradley model is now starting to turn over. So that's telling us that we could be looking at a potential top here in stocks, and then we'll see what the sell-off will bring. Long-term, folks, this thing is incredibly bearish. We've had 2 bearish Gartley patterns in the Dow since we topped on May 19th. This is the second one, finishing today, if we're in fact correct. And then we'll see see what goes from this level on. But this is how it looks. Technically, it's quite clear. Now, we've got gold coming down near the lows of the days now, 1250. If it goes below 1246, folks, we're looking at 1225 in the gold. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.